So have you ever been in a situation where a stock is going up and you decide to buy it, and as soon as you buy it, it begins to pull back in reverse? Well, what I'm going to be doing is I'm going to be sharing with you two trading strategies that I'm currently using to identify the exact top for the exact moment right before the market's about to reverse and pull back, so you can buy put options, short the market instead of getting screwed going long or buying into a false breakout. I will show you how we are able to identify and create our key levels with these two unique trading strategies that we're using to consistently profit within the market. We used our trading plan yesterday and we bought puts at the exact high of day for the time being, for the moment, and I made a $1,400 profit doing this in one single minute. The power of this trading strategy is you can make a 20, 30, 40% return very, very quickly with 0 date expirations in just a few minutes. And I'm going to walk you through how we consistently profit using this trading strategy. So here's what you're going to learn in this video. You will learn how to identify a potential top, a potential tipping point, a potential reversal point. If you were to buy call options and go long at this level, you would be absolutely crazy. And I'm going to show you how you can profit doing this using put options, going against the market, shorting the SPY. Let's get straight into it. So we have to start off with the plan. In terms of our trading plan within Trader Society, I had stated yesterday, based off the daily pattern, if we can get a nice move up, the best trade idea should be put options at our key resistance levels. These were our key resistance levels to buy put options. We had two levels. The first level was 449 to 449.20 for the gap close reversal. The second level is going to be 451 to 451.20. I ended up buying put options. As you could see, I alerted to my team real time because I actually trade my plan. And you could see right here in terms of 10 a.m., this is where I alerted my put options. 1 minute later, those contracts went up over 10%. I bought them at the exact low at 10 a.m. and I made a $1,400 profit in one single minute, not even taking a big position size. So just to show you in terms of the contracts real quick and the power of this, those 449 puts were alerted at 10 a.m. These are the contracts. If you look at the contracts option chain, you can visually see when I sent out that alert right here at 10 a.m., which was the exact low of day on these puts and the exact high of day on SPY for the time being when I entered, they went from 77 cents all the way to $1.50. They went up almost 100% in just 10 minutes. That means within 10 minutes, if you put in $1,000 into those contracts, you could have made a $1,000 profit. This is why we trade options, right? So let's get into the strategy. How do we come up with these trading plans? How do we create these key levels? How are we able to consistently profit? How are we able to call the exact top before it even happens? And I want you to understand, I am not calling a major trend reversal. I'm not saying that it's just going to reverse going bullish and it's going to keep on getting crushed throughout the day. What I'm saying is it is going to be a quick scalping opportunity where I get in like a sniper and I aim for a small pullback within a couple minutes on short-term expirations. I am not saying that it's going to have a major crash and I'm going to hold for a massive win because I am a scalper and a scalper gets in and out very, very quickly. So here's the trading strategy. In terms of the trading strategy, it's two strategies and you could stack strategies together. In this case scenario, it ended up being two strategies in one trade. But I'm going to show you each strategy separately because you can just use one of them. You don't have to combine both, right? So what I do is I trade the chart. I visually trade the chart and I trade what I see. So these are the two strategies that I ended up learning, not by following other people, but by simply analyzing and watching the chart. You have to have an understanding of how to see the chart properly and how to think and read the chart properly, right? So let's get into this. What I do is I identify what we call a bull trap level. A bull trap level is where the bulls get trapped. All the people going long, they get absolutely crushed. And the way that I'm going to show you in this situation is I'm identifying a bull trap level that is at support, but it's towards resistance. So let me show you what that means. If you look at this chart right here, this is like the 5-day, 30-minute, you can see you have a lot of resistance at 451.20 and you have a lot of support. See how it's bouncing, it's consolidating right here at 449.20, right? But it's towards major resistance. And the reason why this support is towards major resistance is because SPY was recently at $443. That's a massive drop from 449. So what I'm telling you is you want to identify this bull trap level when the SPY is towards the middle or the higher end of a resistance channel. So you can go back throughout like the 10-day, 20-day, 30-minute chart, and you could just visually see, if you look right here, where's all the resistance? All the resistance is at 451. All the resistance is at 449. So you're going to want to use what I'm teaching you when the SPY is towards the higher end of resistance, when it's overbought. Now, what's the next step? The next step is you need to identify where the bull trap was created. So you need to ask yourself, where is SPY forming support? When it cracked that support, did it have a massive sell-off? And the answer was right here. You can see the SPY was consolidating at 449.10. It was consolidating, it was consolidating, it was bouncing, it was consolidating. All of a sudden, the SPY has a gap down. So the SPY ended up opening up lower than it previously closed. It had a move during extended hours trading session, and it blew right through the support, and it kept on selling off. It never spiked back to 449.30. It kept on dropping. So understand what's happening. A bull trap was created. All the people who swing traded call options got absolutely destroyed because the SPY cracked the support at 449.20, and it kept on dropping. So what do you want from there? This is what you want. You want a big drop. The bigger the drop, the better, and the quicker and the more volatile and the more brutal, the better. So that's what you want. The best situation is a multi-day drop, is a massive sell-off. What's a massive sell-off? 3 points minimum. You're going to want a 3-point drop minimum. The longer it lasts, the better. The quicker it happens, the better. So this is a great situation. The SPY went from 449.25 and it never spiked back. It kept on dropping, and it dropped all the way down to 443. That is a 6-point drop in 2 days. So this is what you need to understand. The SPY just dropped 6 points in 2 singular days. So the most likely outcome is, and this is what you're going to want to happen, you're going to want an overreaction. The SPY just had an overreaction to the downside. The bulls just got trapped. The bull trap was created at 449.20. You're going to want it to spike back up to 449.20 as quickly as possible. The quicker it happens, the better. And then this is what you need to understand. The first time the SPY tests this 449.20 level, after everything that I just said had happened, the first time it tests, the most likely outcome is when those 449 puts, when the SPY goes above 449 and it tests this level for the first time, when those puts go out of the money, the most likely outcome is, even if it's going to be a bullish trend day, the SPY will have a nice drop for scalpers. I'm not saying it's going to have a crazy reversal where you can just buy and hold puts and it's going to go super bearish on the day. What I'm saying is, even on a super bullish trend day like today, the most likely outcome is when those 449 puts go out of the money and you buy them out of the money, they will likely go right back to the money. SPY will likely drop right back under 449, and then that is how you make a big profit as a scalper. When the contracts go a little bit out of the money, you buy them. And if you can flip those contracts from out of the money and then they go back in the money, right? And you sell them in the money quickly, that's how you flip a massive profit with 0 dates. That is how it works. That's the strategy. That's the game. So just understand, this previous support is supposed to drop first. When it goes back and spikes back up for the first time, you know, after having that massive multi-day drop, it is supposed to react as a resistance level first. It is supposed to pull back first. Those 449 puts that went out of the money are supposed to go back in the money first. It is supposed to form a lower high attempt. That is what it's supposed to do. It is supposed to form resistance instead of support here on the first initial time it is tested. Not the second time, not the third time, not the fourth time. The first time it is supposed to react as a resistance level. That is how it works. So we set our price alerts in advance, and it could take days. It could take weeks to trigger. But when they trigger, I am telling you, they work. Every single key level that I am posting in these videos are playing out to an exact T. The titles in my videos have literally been the exact tops, the exact lows. We are consistently profiting using these unique trading strategies. Now, Will, what's the second strategy? Because I just shared with you the first one. The first one was you identify a bull trap support level that is towards resistance, towards the middle or higher end of a resistance multi-day channel. You wait for it to have a big, massive drop. It could be a crack of support or it could be a big gap down. The bigger and longer and quicker it happens, the better. You want a massive crash, a massive overreaction to the downside. Then when it spikes right back up, it should react as a lower high, should react as a resistance, right? There is ways to determine if it's going to continue to drop and have a big reversal. That's a whole nother video, and that's not my style of trading. My style of trading is fast money. When I bought those puts at the exact low doing what I just said, I made a $1,400 profit on a very, very small investment in one single minute. Done. Like that. $1,400 profit. Boom. So that's the first strategy. Now, what's the second strategy? The second strategy is called a gap close reversal. When the SPY has a gap down towards major resistance, towards the upper end of the channel, when it goes back up to fill that gap, it's going to try to have a reversal. This is how we were able to buy puts at the exact high of day right here. You can visually see the SPY had a lot of resistance at 448.50. You see the resistance kept on selling off, right? So when the SPY gapped down, opened up lower than it previously closed, as soon as it shot right back up to close this gap, it had a reversal. So we look for a confirmation that once it fills that gap, it's going to try to pull back and have a reversal. Now, when you're doing that, you want that gap to be towards major resistance, and you want it to have a gap down, and you want it to keep on dropping. The bigger the sell-off, the better. The longer it lasts, the better. And then you want it to quickly spike up. Listen to everything I'm telling you, because that's the key to doing this and using this strategy the right way. There's a wrong way to do it, and there's a right way. You want it to be at major resistance on a multi-day channel. You want it to drop really, really fast, an overreaction. You want a big drop. The bigger the drop, the better. You want it to last long. The longer it lasts, the better. And then you want it to go back up as quickly as it went down. You want it to shoot right back up. I'm telling you, it's going to try to reverse. And you can see when the 30-minute flip red, it kept on dropping. 30 minutes is key in terms of continuation of a reversal. Now, what I did in this situation was I combined both. I combined two strategies, gap close reversal, and previous support should react as the new lower high because that's where the bull trap was created. So I used the first strategy where when support cracks, it should, if it has a massive drop and it goes right back up, it should react as the lower high first. And then I noticed there was a gap that was waiting to fill above right here at 449.30, which was aligned with that previous support where the bulls got trapped. So that is called stacking strategies. That is two strategies that I stacked to work in my favor. Now, I will trade with just one strategy, but I will do everything in my favor to stack multiple strategies. There's a lot of newbies who are stacking indicators. I'm not stacking indicators. What I'm stacking is everything I'm seeing in this chart. And I'm seeing two trading strategies combined at one key level, my friends. That's what I'm seeing. So that is the trading strategy. That is some of the basics. Now, in terms of the ways we confirm that it's actually bearish, in advance, it's just kind of understanding that it's supposed to drop initially on the first reaction, but it's also using the 1 minute chart. So the time frames that I use to confirm it's going to be a resistance, and again, this is already kind of confirmed in resistance in advance. The first time I test, it should just drop. That's what it should do. So I kind of just get in a sense. My confirmation with this typical strategy is usually beforehand. I just want to get in on the trade. So I'll just look for, some bearish 1 minute candlesticks. You can use the 30-minute chart as well, but it's not too complicated. It's a simple price action trading strategy. So basically at 10 a.m. when I bought those puts, the reason why I did was I noticed that my key level worked at the market open. It already worked. I wanted to buy puts at 449.30. You could see right here, it's written in stone. Watch the video I posted yesterday. You'll see the exact plan. 449.20, gap close reverse. I want to buy puts 449, 449.20. I don't like trading the first 30 minutes at market open. So as soon as the SPY hit our key level, it dropped first. It worked 100% spot on. So I told myself, okay, the SPY is dropping. It's looking bearish. There's a gap that's waiting to fill below. It might want to try to fill the gap. It might want to try to flip bearish. So when I noticed that it got new lows on the day and it shot right back up to our key level at 449.10, and then I noticed that it formed this bearish candlestick. It was starting to flip bearish. It was starting to look bearish. I told myself, I'm going to get in on these puts. I'm going to give it a shot. I'm going to get in on the puts. Worst case scenario, I risk right here at 449.40. And then as soon as I got in, I waited for a slight bearish flip in the 1 minute candle. It didn't close bearish, but it was about to close bearish. So I said, you know what? I'm going to give it a shot. The level already worked. Let me give it one shot. It's already confirmed bearish. It's pushing lower. Might as well give it a try because this was a nice quick little overreaction to the upside. So it's going to try to drop right back down. Surely enough, it dropped right back down to the support and I sold for a $1,400 profit in one single minute. If I would have held that trade for 9 more minutes, I would have made over like $8,000 or something like that. It's absolutely, I would have made $9,000. I would have made almost $9,000, around $8,000 if I held that for 9 more minutes. But like I said, I scalped super quick, and then I called it from there. From there, I told my team, okay, our key level worked twice. We have to respect that. We cannot hit it again. It already worked twice. The money was made. Everyone was green. And then from there, I told them, we need to wait for the next best level. And the next best level for puts was right here at 451 to 451.20. And it literally just dropped at 450.68. It's literally already pulling back towards our key level. And that was the gap close reversal strategy too. There was a gap that was waiting to fill above at major resistance right here on the SPY at 451.20. So the strategy works, man. It works. And if you want to learn how to master it and you want to surround yourself with the right network, then it's the first link down below in the description. I'm telling you, man, Dimitri made over $20,000 today. G-Roar in the chat, the lead moderator, the lead trader, along with Dimitri, G-Roar, his trades today were insane. He did even better than yesterday. The trades he was hitting insane. This is our 9th green day in a row. The polls are all green. If you are serious about investing into yourself and surrounding yourself with the right trading strategies, with the right network, this is going to be the best team for you. What we do is we are all in on SPY. All we do is trade SPY. I put everything into this, and I can assure you, when you join this program, your mind is going to be blown on how well people are trading, executing their trades, alert in real time, using the trading strategies that we are teaching. So I'm going to leave it off at that. It's the first link down below in the description. I'll be posting my trading plan tonight. Be on the lookout for that.